The first thing to know about emerging markets is that in 2014, 10 of the world's largest 25 consumer markets were already emerging markets. And of course that list includes the BRICS, but it also includes countries like Colombia, the Philippines and Nigeria. And in fact, Nigeria has a larger total consumer market than countries like Switzerland or the Netherlands. The second thing to realise is that there is no such thing as one single emerging market consumer type. Emerging market consumers are different across different countries. They have different motivations, tastes and attitudes, different income levels and different consumption patterns. So for instance, the average age of the population in China is 41 years, whereas in India it's 26 years. So that's clearly going to have an impact in terms of purchasing decisions and tastes and motivations. The third factor is that quality is crucial. Emerging market consumers aren't all about price. It's important to offer value for money and also appropriate products. And the brewer SAB Miller has been very effective in this with its Chibuku brand of beer. So Chibuku is marketed to compete with home brew, and it costs 40% less than standard beers on the market. And they've been able to target very successfully low-income consumers with this product. The fourth factor is that the middle class is a key consumer segment for many companies in emerging markets, but there is no such thing as one middle class income. Middle class incomes vary dramatically, and that's even true within a single region. So for instance, in Latin America, the average middle income household in Bolivia earns around $5,000. In Peru, they earn around $10,000, but in Uruguay, it's over $20,000. So there's a huge variation even within a single region. The fifth factor is thinking about access to finance. And access to finance can be limited in some emerging markets. So a good example is credit card circulation. So in Nigeria, there are 4 credit cards in circulation per 1,000 population. And to put that into context, in the US, there's 1.7 cards per capita, so it's a huge difference. But companies can successfully overcome this, and retailers such as Casas Bahia in Brazil, for instance, offer credit, and they focus on affordability rather than the total price of an item. And companies such as Jumia in Nigeria, which is an online retailer, offer cash-on-delivery payment methods.